Good afternoon. This one's going to be super quick for me today. Um, I guess the reason for this particular video is that I've been asked about recent streams and when I'm doing streams and how consistent I'm doing streams. I think the reality is the reason that I've even titled this the way I've titled this is that there's not really much that has changed from what I've shared in the last couple of streams, in the last couple of weeks. So if you come into my YouTube channel, for example, you'll actually see that I've got a couple of streams. Let's go start off with this one. So you've basically got the scenic route, which was the 9th of Feb. I'll put a link to this now in the description as well. I've got the 14th of Feb, which was actually a Forex one. So this is quite interesting. This basically takes us back over the last 10, 11 months, back to April 2021, where I'd actually pointed out, and this again is all in my TradingView profile. So this actually pointed out from where we were on the Elliott structures across majority of the major pairs in the Forex market. So this one's quite an interesting one. There's a lot of information kind of hiding away in that one. Um, and then the other one was from the 3rd of February. Let me just put this one back to see what this one was. Yeah, so on the 3rd of February, this was just a little bit more in depth as to why I've called some of the calls, what we were actually talking about kind of back when we just flipped through some of this, why I was actually calling what I was calling back last year, February 28th, 2021. And again, just a lot of logic kind of hiding, kind of in plain sight, really. There's a lot of information kind of in this. So part of the reason that I'm not kind of pushing out too many streams at the moment is, there's not really that much extra to say. We've actually got a short-term channel within Discord. So one of the calls I was talking about this morning was two key areas. You can see this 942. So basically, the indicator was pointing out we've got this orange dotted level here, which is kind of medium volume, followed by the red level. Um, and that's really what I was looking at this morning in terms of a move up. So just highlighted this on a smaller time frame, and as you can see, we got rejected from the first one on a small time frame, this being 5 minutes. But what we can actually see, if you zoom out a little bit further, I'll come into this now on the chart in a second, you'll actually see that we had a little bit of a consolidation, a bit of a cluster in and around the orange level. Okay, so what I'll do is I'll zoom back out. I'll put this on, and you'll actually see that all we're doing right now is consolidating between two levels that I'd actually highlighted from this morning. Okay, so we've come up and through, into that level. We've now consolidated sideways. So where we are right now is we're in this process of working out, I guess, where to go next. Now, the obvious thing for me is we've got a massive false bar on the smaller time frame, which means we're likely to stay in this consolidation range for a little bit longer. If we zoom out, let's have a look on the 4 hour. On the 4 hour, well, clear as day, we're already into the overbought territory. There's no false bar there and potentially across. So what we're probably likely to see is another wick fill on the smaller time frame before a half decent drop, on this. I think big picture, again, even less has changed now, I think, in terms of where we are. If I'm honest, I feel that the A might not be complete. I think ultimately, I'm not convinced that this is actually the move up B, although there's a nice impulsive move. I feel that when you zoom out on the daily, you'll actually see the logic behind this is that I feel on the bigger picture, we've only come down in now three waves. And if this is potentially a zigzag, and you have to keep in mind a zigzag is often the largest, well, I suppose the largest is the most common in terms of the types of, um, I suppose, types of pullbacks that you actually see. So when we look at corrective patterns, I'd say zigzags are maybe 70% of the time, if I'm honest. I think you're more likely to see it after a five, and this was ultimately a weekly five. So if we look at a zigzag, now I have mentioned this in the last couple of streams that I've just mentioned, why you shouldn't trust these clowns. Bitcoin update, the scenic route. Again, I'll post those two in the links below. So I've mentioned why this could have been easily a 123, a 123, and then this ultimately being a 5. Okay, so if we come down potentially 1, 2, 3, 4, 5, that is definitely one option there. Okay, now on the software that I use, the advanced get software, the suggestion is that the first move down is actually this one. Now, if that's the case, we've got a 1, we've got a 2, we've got a 3, and this is actually only the 4 back into what I would say this kind of region. And again, I'm not going to go into too much depth here. That's what we cover as part of the educational content within Discord. So there's a lot of logic there for me that suggests that potentially A is not quite complete. And if A is complete, then I think it's a really quick turnaround for the time frame. And again, I've covered in these last couple of videos as to why I don't think this is going to be quick. I think the desire for many retail traders, and especially the guys that were buying, 55, 60 in terms of the move up or even plus 60, I think a lot of them want this to be kind of done, sorted, V-shaped recovery. And I think the attitude is that they've actually seen and taken this as the V-shaped recovery. The reality is we haven't really created any form of bullish momentum from this just yet. And again, I've made some jokes about this. There were people calling 275K when we were at 68. For me, guys, when the price is not doing anything, the reason that I've made some of these videos and posted some of the tweets is there's not really that much to say. And apart from repeating myself, there's really not that much to say. So I guess overall, the same situation as I've mentioned the last couple of times. For me, this was the weekly 5 and a monthly 3. You know, this is very unlikely to be the monthly 4. Now, the reason for that is I think that even if we take this as an A, a B, and a C, that is actually only an A move at best in the bigger picture. And I'm talking weekly time frame. So even if we assume now that we see another a corrective B, and a push up C, that is only going to give us the B. Even best case scenario. Now, from there, we clearly, if this is a 5, we then have a 3. We're likely to see another 5, which could easily take us, let's just be realistic. We go 1, 2, we go 3, we go 4. And I think, even in the best case, best will in the world, it's going to be another double bottom type move. You can see the market structure in the way that I've just drawn out. You see this as pattern. A lot of people will see this as head and shoulders and so on and so on. So ultimately, there's nothing stopping us not going deep in terms of the move. We could see a 23, we could even see a 19, a 19.8 or something like that before it's invalidated. I think for me, it comes back down to the time in terms of the big picture. The time is going to be a bigger factor than the price levels at this particular point. And I think if you look at the COT data, which I've covered and covered and covered again, guys, then the leverage funds still have vast majority to the short side. Now, people will say, whales are accumulating. Yep, whales are completely different. Whales are, large holders. Whales are not institutional investors, institutional buyers. A whale could be classified, with $1 million. You're talking about somebody spending $100 million, $500 million, $1 billion. And that's the difference between the institutional investors, leverage funds, and ultimately whales that most of retail will see as, these guys are big players. So I think, like I said, overall, that's really all I'm seeing. That's what I feel at the moment. It's not doing anything different to what I mentioned, way back when. I've covered this, all the way in the last year, 12 or maybe 13, 14 months now, actually. So a little bit further. So yeah, so the last 13, 14 months, I've actually made a lot of this public. Prior to that, I was actually just trading this and obviously scaling out of my Bitcoin position personally. But if we go back, what I was looking at, I think this post was the weekly forecast, and this was actually last March. So I'll put this onto the weekly. If you look at what I was saying back last March, the only thing that's really surprised me is that we didn't actually get the monthly 3 up into the range. And we actually had a truncated move here, which I'd mentioned in August as to why this move just wasn't interesting for me as to take this up. The risk reward was basically stop loss below these levels for a reward around 60. It was almost a one-to-one type trade. It just wasn't attractive. So that's the only thing really that has changed, in my opinion, in my first analysis that I was putting out publicly. Um, yeah, so we've done nothing more. We've kind of technically created a double top. We've come back down to the value area, which I clearly posted. Yeah, I'll find the post. I clearly posted this back March. Let's go through some of these. Where was it to? It was a year. This particular post. It was a year in the life of Bitcoin and the roadmap update as well. That was actually one that I covered. Where was this one? I just seen it, just passed it. A bit further down, was it? Yeah, this one here. Just straight past it. There we go. Let's use the roadmap update. So, the roadmap update, guys, this was why I'm again saying nothing's really changed. Bigger picture. We're going to go down once we finish loading. Still loading. Yeah, so look, these are the kind of levels you can see. March the 18th, calling this call down, bounce back up. We've done that. That was the 4, that was the 5. I thought the 5, if I'm honest, would have gone a little bit higher. We didn't. We got to 69K. I'd mentioned why in these particular posts in September, why this level was going to be utilized for that move. Scroll on down, fast forward a month, 10th and well, not even a month. It was actually the 27th of October. So 3.5 weeks later, we come up, we tagged the level, rejected off the level, and done what we thought we were going to do. We've come on down. We've got the first move, 45, 46 was the first move down for that, where we're going to see some kind of resistance. We come on down. We obviously come back, and if you look at that 45, 46, look, that was where the consolidation was taking place. We've then come on down back to the value area, and right now it's just a question of time. I'm just going to re-emphasize that. This isn't a depth now in terms of the level. We're going to play above and below this value area, I feel, which is in essence a giant accumulation phase. And within that accumulation phase, there's going to be smaller distributions for these guys to unload on to retail. This isn't the big boys getting wrecked. This is ultimately the little players, the retail players, ultimately getting pissed off. One, with an elongated time factor, and two, they've bought in at 50, 60, 65K, and reality is, guys, if we're here for 3 months, 4 months, 6 months, it's not going to be a surprise. So, overall for me, still bullish. I still feel that this is a longer term move on up. I'm just not quite feeling it yet. We've got low volume moves. We're still around the value area. I think before I'm interested, I think we're going to see the C leg of ultimately the Elliott, which will in essence be the spring of the Wyckoff. And at that particular stage, then it becomes an awful lot more interesting for me personally. So, yeah, I'm going to keep that one, like I said, nice and short. Keep that as it is. Hope you enjoyed watching this one. Thanks for watching, and we'll see you in the next stream.